Okay, property investors, in this video I'm going to show you how you can process a brand new property investment purchase into Xero. Watch for a demonstration. In this demonstration I'm going to show you how you can process a new investment property purchase using Xero. Okay, in order to complete this then there's going to be a couple of documents you're going to need firsthand. So firstly then you're going to need something called a completion statement. I'll just show you one of these now. Essentially, it's a document which looks something a little bit like this. It's sent by your solicitors. It basically details things like the purchase price, all of the purchase costs, so things like stamp duty, various different legal fees, and details of the mortgage advance and the balance owed from the client to complete the deal. This is like a pretty standard looking one, to be honest. They might look slightly different, but it basically is a detailed invoice essentially of the property purchase. You're also going to need something called a mortgage offer, or potentially a mortgage statement that shows the same information. This could be several different pages long, looks something a bit like this. But importantly, it's going to have details of, I should flick to the relevant page now, details of arrangement fees for the mortgages, which are added to the loan. So you've got an arrangement fee there of £1,890 and £20 fund transfer fee. Both of these have been added to the loan. So really importantly, that when you come to when you look at your completion statement, you'll have the mortgage advance £62,980, but then these fees won't be included in that. So what will happen is the mortgage lender will basically send your solicitor money and the net mortgage amount, which is basically the total mortgage less these fees, because these fees are added to the loan, but they don't pay them to the solicitor because obviously it's fees that you need to pay. So we need to just be a bit careful with that when we process the transaction. Otherwise, they're not going to show, and the mortgage balance will be incorrect. Okay, so making sure we've got these two documents, then we're going back into Xero, and what we're going to do is we're going to process a couple of transactions first. So this demonstration also assumes that you've set up your chart of accounts correctly for a property investment company. In the description then I've got a recently updated chart of accounts in September 2025 for a property investment company. You can download that for free and set it up in your Xero account. In that there's a few accounting codes which you'll need to customize, and again I've got a chart of accounts video where I show you how to do this. But essentially, just to check you've done that correctly, so go into accounting, chart of accounts, go into assets, and what we'll have done is see there the 700. We've set up a specific accounting code, so something that goes in the balance sheet as an asset for the property purchase, and I'm calling it 56 Lock Street investment property. So that's the first line of the address of the property in question. And I've got a specific accounting code there for that property. And then if you click into liabilities, so liabilities are something which the company owes. I've set up a specific accounting code for the mortgage finance for that property. So you can see there, number 902, 56 Lock Street mortgage finance. Okay, so before you can do this, process this transaction yourself, you need to make sure you've got the relevant documents, the completion statement, the mortgage offer. You've set up your chart of accounts correctly in Xero, and you've got a specific asset and liability code for your new property purchase. The final thing you need to do then is set up your tracking categories for your investment property. I've got a separate video again in the description to show you how to do this. That's going to mean that any kind of expenses and income associated with that property can be linked to that property in Xero, which is a really handy trick. Okay, what we're going to do now then is going to start to process the transactions. So let's go to Home. I'm going to click into our account, and you can see there's handily two different transactions, which are both associated with the purchase of this property. Obviously, if this was your real Xero account, you're going to have a load of other transactions as well, but I'm just trying to keep it nice and simple and just have these couple of transactions. What you'll see is these are fairly standard with the property purchase. You'll have an initial small fee, which is basically a payment on account for the solicitors to start working on your behalf. So it might be something like £300. Basically, the money you initially pay the solicitors, they start doing things like searches for you and open a file for you. And then later down the line, you'll have a payment which is for the deposit. So this transaction, this example assumes that you're purchasing the property with a mortgage. If you're purchasing it with cash, this will be different. It might be a larger amount for the full purchase price of the property. In fact, if that is the case, it makes things simpler. But we're assuming, as with most property investment purchases, that this is achieved using a buy-to-let mortgage. Okay, so we've got the two transactions in there, and what we'll do is we'll just go to the completion statement and we'll check those transactions correspond with what's in the completion statement. So we've got £300 and the 24,584.96. And we can see there we've got money paid on account there, £300, and then balance required from the clients. That's the amount that you will need to pay as a deposit, 24,584.96. So confirmed they both match, so happy days. What we need to do now then is process these two transactions. So the important thing to point out, I talked about assets and liabilities before. So these are capital expenses. Any expenditure which is associated with the purchase of a property, including in this case, the payments for the solicitor to start working on your behalf, and also deposit and also the legal fees, which are part of the completion statement. These count as capital expenditure. Okay, so that means that it's added to the value of the property. So it goes in the balance sheet. It's not an expense which goes in the profit and loss. So you're not going to add the accounting code, legal fees or an expense code. It's going to be a balance sheet code to go in to add to the value of the property. So what we'll do now is we'll process these two transactions. So we've got, first it's going to ask who you're paying it to. So this is we call them property lawyers. It'll be the name of the solicitor. So we're going to copy and paste that in there, property lawyers. What accounting code? So I mentioned before, this is for the specific asset code in a chart of accounts for this property, which I set up earlier. So 56 Lock Street investment property. No, not to be confused with 56 Lock Street mortgage finance, which we'll use later on. This is the asset, so it's you can tell by the code number, but to make sure you name them correctly so you can distinguish between the two. Then what we'll do is we're going to copy details across, or do this manually if we need to. So payment on account for 56 Lock Street. Add that in there and then process that transaction. I'm going to click OK. What we'll do now is we'll process the second one, and Xero is clever. It's basically noted that we did the previous transaction. It's used AI to work out that probably the same details apply to this transaction. We're just going to double check them and make sure they're correct. So gone to property lawyers. It's the same accounting code we used previously. So the Lock Street investment property, which is an asset accounting code, and it says there payment account for 56 Lock Street. I'm going to click OK. Okay, what we'll do now is we'll just check that is in the correct place. So what we're going to do is we're going to click on accounting, reporting and balance sheet. I'm going to select today's date. And what we can see there is at the top there, 56 Lock Street investment property. You can see that value equates to the amount of the two transactions that we just processed. So importantly, this transaction has been treated in the balance sheet as an asset, which is correct. If we were to go over to the profit and loss statement, there should be this transaction won't show in there. If it did, it would be incorrect. So that's just something you can do to check you put it in the right place. See, the layout of your balance sheet for a property investment company would look slightly different to this, but I'm just using the demo company, which has its kind of standard one, which yours will probably hopefully look different from this if you set it up correctly using the video that I show in the description. Okay, what we're going to do now is then, so important to point out is you can see there the amount of the property value for 56 Lock Street is shown as £24,000, nearly £25,000. If we go back to the completion statement, we can see that the purchase price was £84,000. Therefore, it's not showing currently the full amount in the balance sheet of the value of the property. That's because it's only processing in Xero the amount of money we've actually spent towards the property. It's not taken into consideration things like the mortgage advance, because the mortgage advance hasn't gone through your Xero. It's essentially money which the lender has paid to your solicitor to help you buy the property. So it's never going to go through your bank account, and so it's not going to show in Xero. So if that's all you were to do in Xero, just to add the details of those two transactions, it's going to mean that your balance sheet is going to be inaccurate because it's not going to reflect the full value of the property. So in order to rectify this, we're going to have to do something called a manual journal. So what we're going to do is going to show you how to do that now. So we're going to click on to accounting and chart, wrong. Click on manual journal. Sorry, Xero recently changed their layout, so it's just taken me a while just to get used to how they've got their different areas set up now. It just takes a bit longer to navigate to things, but I'll soon get used to it. So click on manual journals. And what we're going to do is going to click new journal. Okay, so what we're going to do now is we're just going to add a description as to what this transaction is related to. So we're going to say purchase of 56 Lock Street. Going to add the date. I think we said the 2nd of September 25 was the date of the transaction. We can check it with the completion statement. In this case, unhelpfully, they haven't put the date on it, but ideally the completion statement should show the date of the transaction. Okay, and if you haven't seen a manual journal before, to be honest, it's something that often it's probably better to get your accountant to do this for you because it can be a little bit fiddly, but basically it's a way of doing a manual entry to a transaction which doesn't show ordinarily through your Xero account. So in this case, like I said before, the details of the purchase, which is the mortgage, which has gone to your solicitor to help you buy the property, that's not going to come through your bank account. So it's not going to reflect in your balance sheet in Xero. So that's why we need to do a manual journal. So it's to do, little things like that. It's got various other uses as well, which I can talk to in another video about. So in this case, what we need to do is we need to basically add the details of the property purchase from your completion statement into this manual journal. So what we're going to do now is just click to the completion statement. Another tip for you here is, so just have a read through this. You can see here that your solicitor in this case has added up all the different categories, happy days. It's always worth just manually with a calculator going through all of their different areas and just making sure they all add up. So just use a calculator to add up all these different costs associated with the purchase of the property and just make sure that total is accurate. I've clearly gone through countless completion statements over the years where I've been processing on behalf of clients who are property investors, and I would say probably about 1 in 20 or so is incorrect. Frequently pick up errors, can either be in the favour of the solicitor, meaning the client hasn't paid enough money, or vice versa, the client's been ripped off. It's not been done on purpose. You just find that solicitors often they don't even use Excel, they just use like a Word document sometimes to produce these, and it's got somebody beavering away to add up sums and making a mistake. And so just make sure you just manually go through and just check all the entries are correct. I have done this previously for this one, so I'm happy that all the balances are accurate. Okay, so what we do is the first thing we need to do is just look at what the purchase price was, so £84,000. And then what we're going to do is deduct from that amount any payments we've made towards the property. So we're going to take the £84,000 and then use our calculator to deduct £300, which is the payment on account, and the amount of money we paid as part of the deposit. Those two transactions that we had going through Xero. And we'll go back to the manual journal. What we're going to do is here, purchase of 56 Lock Street, deposit, we'll call it purchase price. Purchase price less amount already paid. Accounting code we're going to be using again is the Lock Street investment property. Again, we've got the second category set up, so we can add that there. And what we need to do is just to do that sum, which I've worked out in there. So it's the 84,000, the amount we've already paid, so the £300, and the amount of deposit we paid. I'm going to add that amount to a debit. Okay, so a debit is going to have what it's going to mean is that's going to increase the value of the property by that amount. So this is basically the purchase price less what we've already paid. Because if we put the full purchase price in here, £84,000, remember we've already had that £24,000 and £300 be added to the value of the property. We're essentially double accounting, which is going to make we're going to overstate the value of the property. So the easiest way to do it is to do the purchase price less from the completion statement, the amount that you as the client have paid the solicitor for the purchase of the property. Okay, the next thing we're going to do then is we're going to use another category here for any associated purchase costs. So going back to the completion statement, got the purchase price details, we've got what we've paid and what the lender is paying on our behalf. Then we've got all these various different fees. You'll have like things like stamp duty, search fees, a whole myriad of different fees, which add up in this case to 3,864.96. What we're going to do is we're going to add these in. So I'm just going to copy it from there and paste it in here. We call it purchase costs associated with property purchase. I think it's also just worth putting in our narration here as per completion statement, just so we know in the future if we refer back to it to refer to the completion statement. Okay, and again, we're using the same accounting code, so 700 in this case, 56 Lock Street investment property. It's annoying when Xero does this. It sometimes thinks it puts in a number for you, because with journals, basically the debit column has to equate to the credit column. So sometimes it automatically fills in and assumes it's going to match the transaction you put previously, which is incorrect in this case. So it's a debit we want to add in. So we're going to copy that amount across. That's for basically the amount of legal fees and associated purchase costs. And again, that is a capital expense, so it goes to increase the value of the property. Okay, the next thing we're going to do then is add the mortgage balance. So let's call that gross mortgage advance. Sorry, my spelling isn't very good today. Oh my god. Okay, so this is going to be treated slightly different. So this is the mortgage balance, which was used to purchase the property. So in this case, we're going to use a different accounting code. This is the liability of the mortgage balance. So we've set one called 56 Lock Street Mortgage Finance. And again, Xero is annoyingly putting a number there without asking our permission. What we're going to do is refer back to the completion statement and just check we've got the right number. So we've got mortgage advance there, 62,980. I'm going to copy that amount and put it into this side. Okay, and that essentially is at the end of the transaction. We see there we've got, we'll just add 56 Lock Street into the property using the tracking categories. We could click post now and we'd be 90% there. We've basically got all the details of the purchase, got the amount of purchase price less what we've already paid. We've got the associated purchase costs, including things like legal fees and stamp duty. And we've got the amount of mortgage balance, and we can see that the journal adds up. Both sides are equal, which is great. However, there's one thing missing, which is why I did the mortgage offer before. If we go through this mortgage offer, we'll see that the actual mortgage balance is not 62,980, it'll be more than that. So there'll be, added to that will be fees which are added to the loan. So there'll be arrangement fee, I'll show on here now, arrangement fee for 1,890 and a fund transfer fee. So if we don't include them on this journal, the amount of mortgage in the balance sheet will be incorrect. Okay, so it's really important here, before we continue, you should speak to your accountant and just confirm with them how these fees should be treated. They will be able to give you some direction on how they can be treated. But to make this nice and straightforward, we're going to basically add them to this transaction, so they're treated as expenses as when they took place. It may not be correct though. Speak to your accountant as to how these fees should be treated, but it's beyond the scope of this video. What I'm going to do now is just add them to this transaction just to show you how you would do it. Okay, so what we'll do is we'll just go back to the mortgage offer and we'll add those two fees up. So 1,890 plus £20, so it's 1,910. I'm going to add these in here. And what we'll do is here, we'll do mortgage arrangement fees. And there'll be basically two transactions for this. So one is going to be the fees being added to the value of the loan. So it's using the same accounting code we just used then, so 902. Okay, and that's going to be a credit because it's a liability. So that's for the amount we just worked out there. So that's for 1910. But with accounting and bookkeeping, for any credit, there has to be a corresponding debit. Okay, so we've got the credit, which shows the increase in the liability. We now need to add the debit, which is going to show the expenditure of the finance costs. So because this is costs which are associated with arranging finance for your mortgage, it's treated as a finance cost, so it's a deductible expense. It's not capital expense, as some of these previous costs we discussed. So in this account code, which I've given you, in the chart of accounts which I've given you, there is a account code for finance charges, and that should equal the same amount. Again, like I said, speak to your accountant just to confirm how these costs should be treated. Okay, so we'll have that again, 56 Lock Street. So now what we've got is details we've taken all the details from the completion statement, and we've taken all the details from the mortgage offer. What we can do now is click Post. And what we'll do now is just flick to the balance sheet again and make sure those transactions show. So reporting, balance sheet. Click to today's date. What we can see now is if we refer back to the completion statement, we should see that this amount should correspond with the purchase price plus all the associated costs purchasing the property, so things like the legal fees, etc., which capital expenses. So it comes to 87,864.96. We can check in the completion statement that is correct. We'll also see if we go into creditors, amounts due after more than 1 year. We've got 56 Lock Street Mortgage Finance, £64,890, and that should correspond with our the details from our mortgage offer or our mortgage statement. When the bank sends us a mortgage statement, you'll see that should near enough correspond with the amount of the balance. I've got a separate video where I'll show you some of the end of accounting period action to make sure your mortgage balance agrees with the mortgage statement, because it will change slightly, but that's for a separate video. But the main thing is we've got now our new property investment has been put into Xero. The amount of the investment property is accurate as per the completion statement, and as is the mortgage amount, as the date when we purchased the property. Hopefully you found this video useful. If so, please remember to like and subscribe. And as discussed in the video, I've got some links to some useful videos in the description. And I've also got a link to chart of accounts which I've created for property investment companies, which you can download for free.